Greetings, friends. Today we are going to be talking about that very infamous R word. That's right, recession has been top of mind for many of you. You're hearing about it on social media, on the news cycles, and in the financial markets. So let's get into it. First and foremost, what is a recession? Well, believe it or not, there's more than one definition, but the most common one is when the U.S. economy experiences two consecutive quarters of negative GDP growth. So this begs the question, where are we sitting currently? Well, Q1 of this year, we saw growth at negative 1.4 in the U.S. economy. Now, we'll have to wait and see what happens in Q2 because we haven't concluded yet. But by comparison, the first two quarters of 2020 saw growth at negative 5.1% and negative 31.2% respectively. I realize that's just as COVID-19 was kicking off. There was a lot of fear going on, and there are a lot of institutions being shut down, but I just wanted to give you a reference point compared to where we're sitting at right now. At this point, I don't think anyone can say definitively that we're headed for another recession, but again, it depends on your definition, and I think we're just going to have to wait and see what happens. So how bad are recessions anyways? Well, I don't think there's anything good that can come from them, but some economists believe that recessions are a necessary and healthy part of any economy because we need to go through these cycles of expansion and contraction, and using that logic, they would argue that bubbles inevitably form in certain sectors of the economy during times of growth, and that recession are a correction mechanism by which valuations come back into alignment with reality. And they would probably argue that would be the dot-com bust, bubble, and subsequent bust of 2000 right around the turn of the century. Also, contrary to popular belief, the stock market doesn't always lock in losses during a recession. I found this one really interesting. A quick look at the S&P 500 post-World War II actually shows that only 5 of the last 12 recessions charted negative returns. And the overall average of all those 12 was positive, a positive 2% growth. So I thought that was fascinating. Now, anyone that's lived through a recession, especially the Great Recession of 08 and 09, or if your grandparents or your great-grandparents lived through the Great Depression, we need not be reminded that these are difficult times that we hope don't come. Things like high unemployment, major stock market volatility, massive increases in government spending that all get passed on to the taxpayer, usually in the form of tax increases to pay for all of this spending, and then of course the hidden tax that we all have to pay, inflation, that we're sitting and paying a lot of right now. So what's behind a potential recession today? Well, I think there's kind of 3 major factors. First is the Fed increasing rates rapidly in hopes of really reining in the inflation surge that they created. And I talked about that in my last video. If you didn't watch it, you can go back and see. But what they're doing is necessary, and investors are afraid that if they do it too aggressively, it's going to hurt the economy. And so if there's one thing that the market hates, it's uncertainty. And the more that investors learn about the Fed's future ambitions and their true intentions with these rate hikes and with the money supply, the more likely that fears will quell and that the market will recover. Second is the war between Ukraine and Russia, which continues to wage on as more and more sanctions are piled on from Western countries onto Russia. You know, it's estimated that about a third of the world's wheat supply comes from that region of Ukraine and Russia is the world's second largest exporter of crude oil, second only to Saudi Arabia. So the ongoing scarcity of these commodities will undoubtedly affect the global economy and engender fear in the stock market until the situation is resolved. Third and not least is China's never-ending, it seems that way, and very draconian zero-tolerance COVID policy that has many of their major cities under lockdown once again. And not surprisingly, this is seriously dampening their country's productivity and their economy and any other world economy that's dependent upon them, like the United States. And so this is going to continue until China decides on a different way to handle COVID-19 than just shutting everything down. So this begs the final question: how should you, Mr. or Mrs. Investor, invest or not invest in a recession? And I think that the best strategy is to stay in the game. Because those who jump off the train while it's still moving will inevitably face the very daunting task of trying to figure out when to jump back on. And I've seen this time and time again, and it usually doesn't end well, but most research has actually proven that those who stay put will end up doing better in the long run than their counterparts that go and bury their money under their mattress or do something else crazy with it. Of course, this is all assuming that you've worked with a professional or you've done your own homework to create a diversified portfolio of investments that are properly aligned with your risk tolerance. I can't emphasize that enough. So for many of my clients, an additional thing that we do is we use a team of professional asset managers, and that really brings peace of mind during times of market volatility, because what they do is they reduce volatility, and that's especially important for certain stages of life like retirement, where you can't afford life-changing losses. If you don't have peace about riding out a potential recession at all by staying in the market, there are other investment tools available to you that provide market downside. So they will give you downside protection, but they still allow you to participate in an up market if we start to experience that sooner than we think. So again, it all comes down to suitability, what's best for your situation. If you have questions, if you've never sat down with a professional, or even if you have, I'd love to meet with you, give you a free discovery session, and have your circumstances reviewed by a professional. So that's all I have for you today. This has been Matthew Holt with Christian Wealth Management, always bringing you comprehensive financial solutions from a biblical perspective. I'm looking forward to seeing you in the next one. Take care and God bless until then.